Good morning. Good to see all of you guys. Welcome back to the Daily Grind. I'm your host, Jump Change. This is live and recorded. All we do is watch other people's videos all day and give a quick market update. And yes, it really is my birthday today. So thank you for the birthday wishes in the chat. I know the wife told people in Discord, so I don't usually announce it. It's just it's another day. You know what I mean? Just another day, but I appreciate it. Thank you very much. All right, let's see who else is in the chat. Mr. Nerd Beast is the one that asked if it was really my birthday, so shout out to you. We have Dan R, Chris Hanley, Leo Lustig, good to see you. Shay Mining, let's see who else is in the chat. Ovalbore Tech, my man Dom G, Tim I Am Crypto, good to see you as well. Steven Cicero, Dumpster Fire. Did I ever say Chris Hanley? I apologize if I didn't, because he was first. But everybody else, DJ Mines, Mining Stacker, what's up, dude? I haven't seen Mining Stacker in a while. Good morning, good to see you. Kirk, what's up, buddy? Good to see you. Thank you guys for the happy birthday wishes, appreciate it. All right, let's get into this. Let's see what this market looks like today. It's kind of neutral. I just left the lights blue. I figured that was kind of it made sense that way. So looking at 26,194 Bitcoin, we have Ethereum 1,600 bucks. Let's see, we have Litecoin $61, we have Dogecoin 6 cents, XRP 48 cents. Mr. Alexander, dude, thank you so much for the $9.99 super chat. And that's exactly why I didn't announce it, because I don't want you guys to feel obligated to do anything. But thank you so much, I appreciate it, Mr. Alexander. It means a lot. So market overall looks
happy birthday cake, confetti ball, balloon,
confetti ball. I totally forgot that thing reads that out loud. I appreciate it, thank you so much. All right, so again, market looks pretty flat, right? It looks flat. And to be honest, looking at the fear and greed index, what I'm gonna do is bring it up now. Fear and greed index at 41. It was at 30 yesterday. So again, you guys know how it goes, you know, buy when people are fearful, or be greedy when people are fearful, and be fearful when people are greedy. So Warren Buffett says it's probably the best advice on the planet when it comes to crypto, because this is what happens. People run out of the market, everybody gets fearful, and the rich guys scoop it all up because they're smart. That's why they call it smart money. That's how it goes. But guys, just pay attention to that, at least my opinion. All right, crypto bubbles. Let's see, man, my computer is lagging to shit right now, and this is driving me nuts. Anyways, we have crypto bubbles on the week. This is the weekly. Caspell looks like it's winning 21.1% on the week. Render is 9.3%, which is awesome. Let's see, on the day, we have 9% for Caspa. Caspa's doing a nice little pump, huh? Wow, it's over 4.5 cents. Wow. Interesting. Let's see, what was... Yeah, actually, it's pretty... This chart, I thought this chart went to like 5 cents, but no. It just went like 4.65 to 4.63 or 4.5. So not bad. I mean, overall, 4.5 cents, I'll take it. I will take it. Let's see. Perfect time to buy, absolutely. Happy birthday. DJ Mine's gotta be 23 instead of 22 right now. Wait, DJ's birthday today too? Wait, what? DJ, your birthday was yesterday? I apologize. That's crazy. Well, happy belated birthday. I didn't know your birthday was yesterday. That's funny as hell. Holy shit, Rondi's is tomorrow too, which is funny. And I just turned 35. I turned 35 today, so I'm a year older than you, sir. All right. Let's what are we doing? Coin market cap. Let's see. Top 10 coins. You guys got me all discombobulated in the chat. We have Bitcoin, Ethereum, Tether, BNB, USD Coin, XRP, Lido Stakes Ether, Cardano, Dogecoin, and Solana. Again, Litecoin is in 15th. Everything is pretty much neutral. All right, let's go over a few things. So I want to watch Crypto Worlds over here. They have I guess the SEC had a meeting yesterday of some sort. I'm not really 100% positive on what it was. I didn't watch it. But I did drop a new video on my channel. I don't know if any of you guys here in the live chat saw it. If you guys wouldn't mind, I would love some feedback on it. Let me know what you think. It's more of like altcoin daily style. I did obviously my own little spins on it, but that's pretty much it. So if you guys could give me some feedback, that would be lovely. I did put a lot of work into it though, and I want to progressively continue to do some short news clips like that. All right, anyways, again, Crypto World, we're going to start with SEC Gary Gensler. Then we're going to figure out how to get rich in crypto. I've been waiting my entire life to find this out. So Altcoin Daily came out with a perfect video today. Hopefully it's not bullshit. And then we have Coin Bureau. Watch out, they're lying to you about inflation in the economy. So I want to know what kind of conspiracy theories we're into this morning as well. Without further ado, if you guys have any questions, please feel free, ask in the chat. Let's get into it.
Today, SEC Chair Gary Gensler renews his push for crypto compliance in testimony before Congress. Franklin Templeton joins the rush of investment firms hoping to launch a spot Bitcoin ETF. And David Moore with CoinCover breaks down the blockchain protection company's new report outlining the barriers to crypto adoption. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto markets are in rally mode on Tuesday, with Bitcoin jumping above $26,000 by noon Eastern. That's after dipping below the $25,000 mark briefly yesterday afternoon for the first time since June. Meanwhile, Ether climbed to $1,600 and Solana jumped to $18. Okay, let's talk about the top stories. Gary Gensler reiterated his critiques of crypto in a hearing before the Senate Banking Committee. In his Tuesday testimony, the SEC chair called out what he claims is wide-ranging non-compliance with securities laws. He also stressed his view that most crypto tokens are subject to existing securities laws. And for the rules that the SEC thinks do need updating for crypto, well, Gensler pointed to a proposed update to the agency's investment advisor custody rule, part of a law from 1940 that dictates rules for investment advisors. In February, the SEC proposed broadening out that rule to include more industries. And today, during his testimony before the Senate, Gensler pointed out that would include all crypto assets. Next, Franklin Templeton is jumping into the rush to launch a spot Bitcoin ETF. The investment firm filed a proposal with the SEC on Tuesday to bring the Franklin Bitcoin ETF shares fund to market. Of course, FT is joining a bunch of firms already trying to launch a spot Bitcoin ETF in the US. Grayscale's Michael Sonnenschein.
Wait, what is that? What is that? I don't even know what that is. Franklin, what? What the hell did they say? Sorry, I'm going to rewind this because I didn't. Franklin Templeton? What is this? I've never even heard of this. Is this like stock shit usually? Let me know if anybody knows in the chat. All right, let me jump back forward to this. Here we go.
A spot Bitcoin ETF in the US. Grayscale's Michael Sonnenschein spoke with CNBC yesterday about the growing enthusiasm for the Grayscale Bitcoin Trust, especially after that court decision that the SEC was wrong to reject the proposal without proper explanation.
The market reaction, the investor reaction has been very, very positive. There's not only a lot of enthusiasm in the underlying Bitcoin market, but certainly seen a tremendous tick up in volumes in GBTC and interest, have seen the discount to net asset value continue to shrink, since the decision came out. But all of us, Grayscale, our investors, the team as a whole, the community, waiting for this 45-day period.
In that testimony on Capitol Hill we just told you about, Chair Gensler said the agency was still reviewing the recent Grayscale court ruling and multiple applications for an ETF. Finally, we're learning more about how hackers took over Ethereum founder Vitalik Buterin's X account. Vitalik posted on decentralized social app Warpcast that hackers took advantage of a SIM swap. That's when an attacker contacts a mobile phone carrier, in this case T-Mobile, and convinces them to switch your phone number to a different SIM card.
What a bunch of dicks. T-Mobile dropped the ball hard on that one. $600,000 lost. They should be suing friggin' T-Mobile for being stupid.
After gaining access to Vitalik's account, the hackers posted a malicious link that reportedly led to nearly $700,000 in losses from victims. All right, one of the biggest barriers for crypto adoption is theft, which includes hacks. So for our main story, Crypto World's Talia Kaplan spoke with David Moore, Chief Product Officer of CoinCover. The blockchain protection company recently released a comprehensive report outlining the factors preventing mass adoption. The research also reveals the, quote, key to crypto's future.
CoinCover surveyed 9 countries, including the US, Canada, Singapore, Australia, and Japan, asking about crypto. You released the report last week, and you note that the research points to a positive future for crypto. Here are some of the findings. Ownership of digital assets is on the rise, with 17% of those surveyed currently owning cryptocurrencies, and 30% saying they will likely invest in the next 12 months. Can you take us through some of the other data CoinCover found that suggests the industry will continue to grow in the coming months?
They do this every day. Don't you think they could like give her a lav mic to like put on her neck so it's not echoey as shit?
Certainly can.
Oh God, this guy's
what I
worse.
found as we analysed and scrutinised the data that supported this report, the application of sort of qualitative and quantitative investigation techniques really pointed out to some clear direction and themes that emerged. The first is that despite the fact that crypto has had a rather torrid time over its past 15 years of life, it's actually very resilient. And that to the fact that, you know, over 30% of the non-crypto users are looking to invest in the next 12 months. But there's some hygiene factors that I think the industry needs to stand up to and support, because the main concerns that we identified was volatility. Now, it's not for us to comment on volatility at the moment. The market is already putting schemes in place to address that. But the concerns around theft and the security was the fundamental underlying opinion that the majority of both crypto and non-crypto users highlighted. And then the final point is that this is where we had a really interesting divergence between the two camps, the crypto and non-crypto users. Crypto users were really, really keen on ensuring that access protection, the fact that they did not lose access to assets stored on blockchain, was their third concern. And non-crypto didn't offer that. What non-crypto users were more concerned about was complexity of the products and services. It's a really interesting insight.
The report found that Bitcoin is the most popular cryptocurrency, with 46% of those surveyed, followed by NFTs with 18%, and then Ethereum with 17%. So no surprise that your research found that Bitcoin is the most popular cryptocurrency. But was there anything you uncovered through the research that really surprised you?
God, I hate being such a dick, but like I feel like she has no idea about anything crypto, and she just straight reads from a teleprompter all the time. I know that's their job, but like it's, I don't know.
I think it was more of a validation of what we were starting to see emerge in the market. When we work with our partners and our customers, there was very little surprise, but for us, it was the validation that the opportunity is growing, but we have to address those challenges that the report was very clear on. You know, that concern around security and protecting those assets. As you would expect with a traditional finance set of products and services, consumers are looking for those same levels of certainty and guarantees they expect elsewhere.
It's interesting to note that half of respondents are positive about their financial returns from crypto holdings, compared to 20% who are dissatisfied with their returns. You'd think that number would be higher, especially with everything that had transpired over the past year, all those scandals and bankruptcies and the impact on crypto prices. What do you make of that data point, that only 20% are not satisfied with their returns on their crypto investments?
I think that's an indicative of where the market maturity is at this moment in time. I think crypto brings with it a whole expectation around the opportunity. I think that what we're starting to see emerge from those non-crypto users versus crypto users is more of a stabilized return on their investments. So that's what we're starting to see as a driver for some of those early stage majority investors. They're expecting more appropriate returns for their investments, and that to me is clear from the report.
Expanding on that, one question the report tries to answer: if crypto is a good space to be invested in overall, what did you determine through your research in that regard?
Yeah, I think crypto is becoming very rapidly part of the mainstream. We're seeing traditional finance organizations really investing heavily in the technology and the support in order to be able to offer crypto versions of traditional wealth and finance products. So we're expecting to see over the next 12 to 24 months much more of that adoption of those types of traditional finance products, but with crypto underpinning their growth.
You brought up what's preventing people from investing in the space. The report outlines certain barriers that you mentioned, including trust issues, criminal associations, and security hurdles. Can you elaborate on those? One point that stood out to me from the research is that crypto exchanges are the least trusted financial services provider among non-crypto users, with 30% saying they do not trust them at all.
I think that's a really interesting statistic. I think all crypto service providers need to step up their security, irrespective of whether they are, their exchanges. I think it's unfair on exchanges. They've received quite a lot of bad press in recent years, and that's in the public perception. That's why they are viewed to be probably the most risky. I think that the entire industry has to look at security, and as I said, bring those levels of protection to their consumers that you would expect from traditional finance.
As it pertains to threats, more than half of respondents are most concerned about fraud, followed by theft, which includes hacking. A little more than half of people who own crypto are satisfied with their provider's commitment to security. What does that show you?
I think that, again, it's that expectation of ensuring that there's layers of security that we take for expectation when we're dealing with traditional finance. What the report informs us is that there are certain categories of individuals that have a risk appetite, which is natural. So for me, it's about being able to address all of those risk appetites across that broader geographic spread of users. And for me, that's where the industry needs to get to in order to be able to satisfy and to achieve the growth that we expect from crypto in the next 12 to 24 months.
Okay, that's all for Crypto World today.
Shout out to CNBC television for that, even though those mics are awful and my ears hurt now. All right, let's get into this. Guys, that like button, appreciate you for hanging out. Let's see. All right, real quick, somebody put a link to Panda's Twitter in our chat. I guess it really happened. I guess his credit card got compromised. Well, rip, my only credit card I brought with me got compromised while traveling. Not sure how, but someone was using it back in North America for $1,000 plus in food deliveries. What? Why? Food deliveries? That's crazy. Canceled it. Now I can't book the next hotel online. Going to wing it and hopefully be able to pay cash in person if available. Panda, if you need help, man, just hit me up and I will book the hotel for you if you need help, because that sucks. That's a shitty pinch. But if he's here and you need help for real, just DM me. You know how to get a hold of me. All right, let's continue. This is exactly how to get rich in crypto. I've been waiting for this my entire life. Hopefully you guys are too, and I really pray that this isn't bullshit. Let's see.
The potential for this market is absolutely insane. That's what keeps bringing people in. The thing that's so unfortunate is that most people come in at the wrong time. And if you're here listening to this conversation today, I want to tell you that you're more likely here at the right time than the wrong time.
I'm so excited.
We are in this accumulation zone, and most people are going to come when the media tells them about it, when their, Uncle Joe tells them about it, or whoever else. They're going to buy at the exact wrong time and then sell at the exact wrong time.
I wish you said Uncle Timmy. That would have been so much funnier.
You need to buy low, sell high. I know it sounds simple, but it's super obvious, and it's really the only way that money gets made in this market.
Well, movie's over. I mean, show's over. That's it. Buy low, sell high. That's all you need to know.
If you're here at this time, you're at the right time to buy low and then sell high when the time comes, but you have to.
So pay the attention.
The best way to make money in cryptocurrency, if you're new, if you're just starting out, so you and me, we're OGs, we have different strategies, but if you're a new person coming into crypto today, Lark Davis, what do you think they should do?
If you're new to crypto, you've arrived at a very interesting time. I'd just like to say that. Right now, we are in the accumulation phase of the market. How long that lasts for, anybody's guess, likely up until the Bitcoin halving. There can always be a change in market cycle patterns.
Real quick, sorry, I have to pause this. What headsets this guy have on? And if you guys know of a good headset, let me know, because I do need a new headset. And this is freaking, these wires are fucking killing me. But I need something better. And this headset's actually kind of slim.
Could take longer, could take less time, but you are in an accumulation period right now. So that means you have the opportunity to go out and buy some of the more fundamentally strong coins, whether that be your Bitcoin, your Ethereum, your Solana, your Chainlink, whatever it might be, at relatively reasonable prices compared to where they were and where they could be going in the next cycle. A lot of people are going to come into the market and want to take way too much risk, and they've got to find the hot new sub-million market cap coin, and then they get chopped up, where they use too much leverage and they get chopped up in a sideways moving market. There's times to go crazy long with leverage in the market. That's when the market establishes a really strong direction. There's times to find those, low cap altcoins and go all in and all this stuff. But a lot of people are just getting chopped up in 2023. And it sucks to see, because it's at a time right now where it's relatively easy long-term to return some big gains in the market.
All right, so real quick, I want your honest opinions. I'm going to put a poll in the chat. I want to know how is your portfolio set up? Do you have more Bitcoin than altcoins, or are you somebody that just accumulates a bunch of altcoins and hopes to get rich? I'm going to put a poll in the chat. Just give me a second. Let me type it out, and then we'll, I would love to hear your answers.
So that's what I'm seeing. You can still get those more strong coins out there, but also because the market is a bit quieter right now, airdrops, baby. Airdrops, go farm those airdrops. There's never been more airdrop farming alpha out there, and most people are too lazy to go and click the buttons and do it. So don't be lazy. Go get the airdrops, guys.
And how do people find out about that? How do new people know how to farm an airdrop? Like, what is
real quick? Airdrops are super scammy. I don't know what he's getting into here, but just please be careful and mindful.
Yeah, so it's a great question. I mean, there's lots of alpha floating around, whether it be on YouTube or on X or wherever it might be.
Don't trust
There's
anything.
lots of people sharing information, but basically, let's take ZK Sync as an example. Here's a concrete example of how to potentially position yourself for the ZK Sync airdrop. It's a new Ethereum layer 2 network, much like Arbitrum or Optimism, which both did token airdrops that made people a lot of money. So what you need to do, you need to go find the ZK Sync website. You need to bridge your money across from the main Ethereum network onto the ZK Sync network. That alone can get you in the running for a potential airdrop. But realistically, what we've seen in previous airdrops is consistency, right? So you want to not just bridge your money over once and go, I hope I'm going to get the airdrop now. You need to keep showing up on chain. So every week you want to go and do a swap on SyncSwap, for example, which is one of the big decentralized exchanges on the ZK Sync network. And you do that once per week. You swap some ETH for USDT and you swap it back, so you get 2 transactions per week. And we've seen in previous examples that it depends on how long you've been using the network, how early you showed up, how many transactions you made, how much money you bridged over, and all this kind of stuff. How many different applications did you use? Did you claim NFTs for early user participation? All this kind of stuff. So Not every airdrop is even close to being the same. Sometimes you can get into the test net. Sometimes you have to bridge real money over to the main net. Of course, there's risks when you're bridging real money onto main nets, right? New protocols can get hacked. There can be rug pulls. You have to be careful, right? So don't bet your life savings on trying to farm an airdrop on a new chain. But if you follow those simple steps, if you're consistent, if you put in the work and you show up on these new chains honestly, because they do look for people who are, I'm going to start 1,000 addresses. You're not going to get the airdrop. They're going to find you. That's what they do. But if you're using 1, maybe 2 addresses, honestly, then you have a good chance of standing up for a decent airdrop in the future.
I'm gonna be real. I don't trust any type of airdrops or anything along those lines. And actually, Jim C made a good point in the chat. He said, make sure you guys have hot wallets, cold wallets, and fuckery wallets, etc. And I honestly agree. So you need, like what I do personally, like I have, even though I don't trust Ledger anymore, I have a Ledger and I have my holdings on it. I refuse to plug it in until I take them off, but that was my main hardware storage wallet. Then I have my Trust wallet, which is just my mobile wallet that I use to like mine to and stuff. And then now I'm using Tangem, which is my other hardware wallet that is kind of like, you know, Trust will be like the checking account and Tangem will be like the savings account. And my Ledger is like a, say like a bank CD, right? So you always want to have like a couple wallets, but don't hold everything on any type of like hot wallet. Like don't hold everything that you own on Trust wallet. Go get yourself a Tangem. I have a link in the description below. I don't care about the affiliate code or anything. I really do just give a shit about you guys not losing your money, because that sucks. MetaMask is a huge culprit of getting hacked and screwed up with these airdrops, NFT bullshit. Like please just don't keep a lot of money on MetaMask or things like that. That's definitely a huge concern for me. So just be safe, guys. Be careful. That's all.
So you're saying 2 great strategies for new people coming into the space today are 1, the airdrop thing, which you just described. I agree. And then the other thing, it's almost like buying Ethereum in 2018 when it was under $100. It already had a huge run up cycles before. That doesn't mean there wasn't, you know, it was a quality project and had, you know, way more of a huge run to go. So there's a lot of quote unquote blue chips, and nobody knows exactly which ones will make it in the future, but there are a lot of good ones right now and they're at relatively cheap prices. And this could be a good chance to get into some of those.
All right. So the Tangem actually also, they do have a new, I guess they do have like a 2.0 wallet, and it actually has a seed phrase, unlike the wallet that I have. It's like it just gets generated within the card and you can't recover it. So like the new version, I guess you can buy another pack of cards and import that same seed phrase, yada, yada. So just read that on the website if you guys are really interested.
Exactly.
And then is there, because I know that you like to farm the airdrops, is there any different strategy for like an OG like us in the space that you could give?
I think for when it comes to airdrops, it's really,
Or any.
yeah, I'd say for airdrops, it's a very equal opportunity space, right? Where we do have basically anybody can show up to the airdrop and try to farm the airdrop. And sometimes it's based on if you put more money in, but you're taking more risks when you do that. You don't necessarily have to put more money in.
Are they just going to talk about
when
airdrops
it comes
this whole
to
time?
people who've been around in the space, maybe are more familiar with how the space works, I would say right now we are a bit spoiled for choice when it comes to some pretty interesting looking low cap altcoins that have potential to have big returns in the coming cycle. And if you've been around, then you're going to understand how to better approach those low cap altcoins. And it's not necessarily something recommended for somebody who just got into crypto yesterday, right? There's a lot of risk there. You need to know how to identify decent tokenomics, decent, user growth, teams that are actually delivering on technology and stuff like this, potential use cases within the industry. There's a lot of moving parts, but if you can find those small cap altcoins, and there are some great ones out there that have strong backers and they fit all the descriptions, and they're only worth 10 million or 15 or $20 million market caps right now, that could go 20, 30, 40x, 50x in the next cycle, potentially, right? But if you are playing the low cap altcoin game, and whether you're new or you maybe need a reminder on this, is to use risk management strategies. And one of the probably the biggest things you can do here is position sizing when it comes to these low cap altcoins, because you have to expect massive price volatility. You have to assume that if you're putting, let's say you have a $100,000 portfolio, you put $5,000 into this low cap altcoin, you have to expect that $5,000 could go to zero. So that's why you keep it a smaller percentage of your total portfolio, only 5%, right? If you lose 5% of your portfolio, it's not going to be the end of the world. Not great, but not the end of the world. And you have to expect that it can go down 50% tomorrow and still do 20x in the future. So you have to be ready for that kind of crazy price volatility. And keeping that position sizing small is the best way to protect yourself against losses and to manage your risk when it comes to playing the low cap altcoin game. And you have to be ready to take profits when you get massive bumps. If you see it's done a 10x, got to get some money off the table because it could lose 90% tomorrow. We see how the low cap altcoin game works. It's a volatile, brutal player versus player marketplace. Even for the stronger coins that look good now, they may not look so good in 6 or 12 months.
I think you identified two key strategies for OGs, you know, taking more risk the way you just described right now. The two things when you're like messing with these low cap, like, you know, high return potential coins is, one, you're not just diving into a coin that has a pretty picture, although, you know, those have done well in the past. But us OGs, we're listening to the whispers, we're getting into the Telegram groups, saying who's backing these coins. And, you know, some funds or some investors have a history of, just have a history of launching coins. So you start to hear these whispers. So that's one thing. Really figure out where you're getting the best alpha.
Yeah, I'm getting really disappointed in this interview. I'm not gonna lie. I hope this gets better because this guy's literally talked about nothing but airdrops and the obvious, which is 100% embellished miner said I think his name needs to be renamed Mr. Captain Obvious. All right, let's continue.
And then number two was the risk management, which is also so important. New people coming into space don't realize that if you're not, you need to take profits, you need to pay yourself, and, you need to just proper, good risk management. So I like that you identify that. Lark, before we get too far, I know you, I've been following you for a while. But who are you for the folks at home who might not know? Feel free to brag a little bit about yourself.
Care? I'm going to skip forward that because I don't care who he is.
So do you still think that crypto is one of the best industries to change your life financially, become a millionaire, whatever?
I just want something of value out of this.
That means
100%. Right now, again, very interesting time to be in the markets because right now, crypto is like $1 trillion market cap. We got up to 3 trillion last time. And even if we just went back to 3 trillion, didn't go beyond that. Life-changing gains of $2 trillion, our market cap comes back in, and it will. Let's say this cycle we go further. Let's say we go 6, 7, $8 trillion market cap from here to the peak. The amount of money that's going to be made on some of these assets is insane. And that takes us up to the 2025 bull market peak, the 2026 bear market. Then we got to look forward to the 2029 bull market peak, where we're going to go over 10 trillion, maybe we get up to a $14 trillion total market cap for all cryptocurrencies combined. And of course, the ensuing bear market, and I guess 2030 after that. The potential for this market is absolutely insane. That's what keeps bringing people in. The thing that's so unfortunate is that most people come in at the wrong time. And if you're here listening to this conversation today, I want to tell you that you're more likely here at the right time than the wrong time. We are in this accumulation zone, and most people are going to come when the media tells them about it, when their, Uncle Joe tells them about it, or whoever else. They're going to buy at the exact wrong time and then sell at the exact wrong time. You need to buy low, sell high. I know it sounds simple, but it's super obvious, and it's really the only way that money gets made in this market. And if you're here at this time, you're at the right time to buy low and then to sell high when the time comes. But you have to remember to click the sell button, or you're going to do a round trip on your investments.
So let's say people are following you, following me. They're doing great in crypto. It's in the bull market. They're practicing good risk management like you talked about. So they did, take some profits. They paid themselves. After you make the money, do you think it's smart to diversify? And what does that mean to you?
Yeah, absolutely. I diversify my profits out of crypto. Crypto is a great money generation machine at certain times. Obviously, sometimes it's not. But in general, it's a great money-making machine, and it's very cyclical. And what I do is I do get money out of the market. So for me, I've plowed a bunch of my profits into stocks, some tech stocks. I own some EV stocks and some Coinbase stocks, stuff like that. But a lot of it's gone into dividend stocks, energy providers, mining companies, stuff like this. And that's just solidly sitting there making money for me all the time, which I love. So that's a nice area to diversify. I did buy some gold as diversification too. And, I'm not sure how much more gold I would buy in the future. Gold doesn't really do a lot, but it's kind of fun to have the little pieces of metal to look at from time to time. And of course, real estate is the classic one, which I don't actually have any physical real estate besides our family home. I do own a bunch of real estate investment trusts to get exposure to the real estate market. I keep going
Real estate is probably one of the best things you can invest in.
back and forth on whether
opinion.
I actually want to deal with the BS of being a
Not right
landlord
now,
or not.
though.
I'm really not
Not
convinced
right now.
yet. I might just stick with real estate investment trusts. But here's the thing. Altcoin money is high risk money. NFT money is like super crazy high risk money. Meme coin money is like crazy stupid risk money. You can make money in all those places. When you make the high risk money, understand that high risk gains can turn into high risk losses super, super fast. So if you are making those high risk gains on anything beyond the top few coins, then you need to take profits. Do it aggressively when it happens. Don't be afraid to take profits. You don't want to become a part of the quote unquote community and be a bag holder for 5 years or something and then capitulate at a 99% loss. It's not great. Been there, done that, not fun. Don't do it.
God, this is terrible. I can't even listen to this anymore. You guys cool with me just like not listening to this anymore? This title is just Altcoin Daily. I had higher hopes than that. That's terrible. That's terrible. A guy talks about absolutely nothing. Talks about nothing. It's all the same bullshit we already know. What the fuck? Let's see real quick. Steven Cicero, dude, my computer's laggy as shit. You know what it is? When I edit a video and I don't shut down my computer, it like my GPU just must be like messed up right now. I don't know. Weird. Anyways, I have 3090s in this rig too. It's driving me nuts. All right, let's continue. So watch out to lying to you about inflation in the economy. And you know what? I like Coin Bureau guy over here. He actually spits facts on what's going on and shows a lot of actual world content, which is cool. So I really do want to see. Mr. Andrew Masad said, WTF, mate. Yeah, it's kind of crazy, right? Let's see. Need a bigger place myself, real estate, so I can have a garage for more power for mining. Oh, so yeah, for more power for mining and huge yard so I can buy a goat to eat my lawn. That's so random. That's the most random shit ever. You know what? They actually have they have people you can rent goats. Did you guys know this? This is like a thing. They like put goats in a trailer, they drive them to your house, they drop them off for like a couple days, they eat all the shit around your yard, and then they come pick them up. I swear to God, I forget who told me about it, but it was the funniest shit I've ever seen when I googled it. It was a riot. But oh, actually, you know what? I do want to show you guys this real quick. Tangem. This is what I was talking about. So I guess the new card here has a seed phrase. Optional seed phrase plus outstanding card design. Who cares about the design? But just in general, it's a pre-order right now, and the seed phrase thing is huge. So you know what? I'm gonna actually reach out to them and see if they can send me a pack of these cards, because I want to see what the difference is between the two cards. But then the classic card, this is the one without the seed phrase. This is the one I have. It works perfectly fine. So feel free. Again, links in the description. I don't give a shit if you guys use the affiliate code. That's not why I was showing you. It's just a good thing to do is have a hardware wallet that you can trust. At least in my opinion, I do trust that one. So all right, let's do it. Mr. Guy over at Coin Bureau cracks down why they're lying to us about inflation in the economy.
Inflation is coming down. Wages are rising. Unemployment is at historic lows. The economy is booming. Savings are at record highs. The markets are rallying. This is what the fourth branch of government, aka the media, has been saying for months. But with each passing day, it's becoming harder and harder to believe, and for good reason. Today, we're going to tell you what's really been going on with inflation, wages, savings, the economy, unemployment, and the markets, and why the people in power appear to be gaslighting us about them. According to most official inflation measures around the world, inflation has come down from the multi-decade highs it hit last summer.
Mr. Crypto Frank with the $10
$10
super
to
chat.
never hearing another random person say consolidation stage. I've never heard more random YouTubers say the market is in a consolidation stage. It's like their favorite word.
You know what? I totally 150% agree with you, and I appreciate it. Thank you so much for the super chat, Mr. Crypto Frank. Good to see you this morning.
The thing is that this drop in inflation isn't happening everywhere. Declining inflation doesn't mean declining prices, and official inflation measures aren't always accurate. For context, there are technically two numbers for most inflation measures: the headline number, which you see in the news, and the core number, which the news doesn't seem to talk about much. The headline number includes food and energy, whereas the core number excludes food and energy. If you're wondering why, the answer is that food and energy are extremely volatile, meaning that their prices can change significantly from month to month. This makes for bad optics when headline inflation is rising, but it makes for very good optics when headline inflation is coming down, like it is now. Take the US Consumer Price Index, or CPI, for example. Headline CPI has been falling fast and appears to be on the brink of falling below 3%, which is certainly good news. As you can see, however, the core CPI seems to be stuck at around 5%, which is obviously not good news.
I want us to read this. Everything you don't understand about money combined with everything you don't understand about computers, cryptocurrencies. That's hysterical. I don't even know how I was able to read that. That's blurry as shit.
If you watched our recent summary of the Central Banking Summit at Jackson Hole, you'll know that around half of core CPI comes from non-housing services. So think restaurants, hotels, mechanics, etc. The other half of core CPI is made up of goods like phones and computers, and housing services like rent. How much each component of core CPI is affecting you personally ultimately depends on where you live. If you live in a metropolis like New York City, then chances are you have higher rent costs. If you live in a rural area, then chances are you have higher goods inflation due to more expensive supply chains. If you're living in an area that's no longer experiencing high inflation due to these factors, then chances are that the prices of goods, services, and rents haven't come down nearly as much as you'd expect. In fact, it's possible, if not likely, that the costs of all the above are still increasing, albeit much slower. This is simply because lower inflation does not mean disinflation. For the sake of simplicity, you can say that inflation means prices going up and disinflation means prices going down. If you experienced 10% inflation last year and inflation is back down to 2%, then it means that prices are still up around 12%. But of course,
has everybody here like rent? Has you guys rent gone up and all that stuff? I assume. If anybody here rents, I don't know if anybody does, but also I got to open Discord, so I kind of wanted to just let you guys know that because it's going to pop up in the middle of the screen like it always does. There we go. Yeah, just let me know. I want to know if your rent went up and everything that you guys do. Like, what's went up in your life when it comes to just bills, right? Like phone bill, food, like what is it around your area? Let us know in
this
chat.
all assumes that the official inflation measures are accurate and representative of what you spend your money on each month. As a not-so-fun fact, many inflation measures, such as the CPI, have been revised many times over the years. If you use the older measures, inflation is much higher. You can learn more about how the CPI is calculated and why it's not exactly accurate using the link in the description. Now, this ties into the second claim being made by the media, and that's that wages are rising. According to Trading Economics, wages in the US are currently rising at an average of around 5%. Wages in the UK are rising at an average of around 8%, and wages in the Eurozone are rising at an average of around 4.5%. At first glance, this is good news because it means people are making more money. Upon closer inspection, however, you realize that these wage gains are barely keeping up with inflation. Not only that, but these wage gains are not universal. Some occupations and industries have seen different gains. You'll recall that core inflation in the US is at around 5%. This means that the actual average wage increase in the US is barely keeping up with inflation.
Oh, it's crazy. So I just asked you guys in the chat, right? I want to see what everyone's saying. So my electric rates just went up a couple months ago. We have, says Leo Lustig. We have Jason Mining say grocery store is crazy. Yeah, dude. Groceries are absurd when it comes to the shrinkflation. Have you guys heard of that bullshit? Where they'll put like more air in the bag of chips with less chips in it. They'll give you guys like, we buy these cereal bars for my kids. They're like, I don't know, they're like healthy little cereal bars, right? And when we first got the new pack after this whole like shrinkflation thing happened, they were like, I would say probably 10% less, like size wise. We opened them and put them next to each other and you could see the difference. It was friggin' absurd. Couldn't even believe it. Someone said he said my cousin's rent went up from $900 to $1,300. Do you imagine jumping rent prices $400 on somebody? That's crazy. Steven, where does your cousin live? That's nuts. I feel like that's New York or something. Sustainable Crypto said everything is up in New York, which makes sense. Yeah. Leo Leste, groceries are so expensive. Electric, food, gas, basically everything except my salary went up, says Sloth Squash. Oh, that's great. That caught me off guard. That's funny. Let's see. Some of the rents in London doubled. Really? Doubled? Oh my gosh. 1000%. Says somebody. Electric, food, water, and property tax. You know what? Property tax is another one that it's crazy. It's crazy how much I pay or we pay in property tax. It's disgusting. It is absolutely disgusting. Let's see. Crazy. I want to see if there's anything else. In the last 20 years, wages have increased 27%, but housing increased 138. Wow. That's a crazy fact. Dog, that's nuts. Holy hell. That's so true, though. That's so true. That is so true. But you know what? Like, the housing markets have bubbles just like crypto. You buy, you know, when shit's about to crash and all the percentages are going low, and then you sell when shit's high. It's the best way to do it. But I mean, real estate and crypto are like the two ways that like you can get legit crazy wealthy by just investing. But anyways, obviously you got to be careful with crypto, but let's get back into this.
The same is true in the UK, where core inflation is around 7% versus 8% wage gains, and in the Eurozone, where core inflation is over 5% versus 4.5%.
Guys, that like button, appreciate you.
Ouch. Now, you'll remember that most of the core inflation in the US is coming from non-housing services. Logically then, these are the areas that have likely seen the largest wage gains. The example that comes to mind here is US UPS workers, who got wage increases of between 17 and 55% as part of a recent deal.
Let's be real. They deserve 17 to 15%. If you guys have seen those trucks that have like no AC, like being in those trucks is like being in a goddamn sauna. So, I mean, shout out to all those UPS, Amazon, FedEx drivers. Their job is brutal. Regardless of them effing up shipments all the time, it's still a brutal job.
If you're lucky, or rather unlucky enough to work in investment banking, however, then chances are that you've received a significant cut to your annual bonus. For reference, annual bonuses make up as much as 50% of the salaries of investment bankers. A bonus cut of 50% therefore means a pay cut of 25%. Yikes. Now, logically, changes in wage gains can and often do lead to changes in inflation. As a matter of fact, the Fed and other central banks were initially concerned that high wages would lead to more consumption, which would result in rising prices and higher wages. Eventually,
sorry, real quick, I just killed that poll in the chat. Under 50% of you, 50% of you have under BTC, under 50% BTC rather, in more alts. That's crazy. 80% of you say that you have more, 80% or more BTC rest in alts, 22% of you. We have 60% or more BTC rest in alts, 14% of you, and basically 50-50 split is 12%. That's crazy. And all track, thank you so much for the happy birthday.
Resulting in higher inflation. This is called the wage price spiral, and the good news is that the Fed and other central banks aren't that concerned about it, at least for now. If you think about it though, the fact that they're not concerned about a wage price spiral could be bad news because it means that the opposite could happen. Oddly enough, there isn't an official term for this opposite scenario. Bloomberg refers to it as a, quote, reverse wage price spiral. As you might have guessed, this is when wages decline, which results in less consumption, which leads to falling prices and lower wages, and so on and so forth. Typically, this is associated with recession, wherein millions of people lose their jobs. But the media claims that it could be possible for wages and prices to decline without causing job losses. The thing is that the Fed and other central banks are not so subtly trying to cause job losses to cool inflation. This relates to the third claim being made by the media, and that's that unemployment is at historic lows. For those unfamiliar, unemployment measures the percentage of people who are looking for work but are unable to find it. This figure does not include unemployed people who aren't looking for work. Similarly to inflation measures, unemployment measures are often broken down into two buckets: general unemployment and youth unemployment. One of the differences is that unemployment measures are often revised as additional data about employment is discovered or recounted. Case in point, the US Bureau of Labor Statistics recently revised its unemployment statistics and found that unemployment was much higher than initially calculated. Even so, unemployment in the US remains at multi-decade lows of under 4%, which is the Fed's target. But that's just the headline figure. The youth unemployment rate in the US has been rising fast since April and is rapidly approaching 9%. More importantly, if you zoom out, it looks like the beginning of a reversal of a long-term downtrend. In other words, it looks like youth unemployment in the US is about to start rising for a prolonged period.
Well, that's COVID, obviously. And then, the reason it took forever to get back down is because they were paying people to stay home more than they would make going to work. So why the F wouldn't you stay home?
What's interesting is that this reversal in youth unemployment appears to have occurred because of the banking crisis which happened in March. Now, this would make sense considering that small and medium-sized businesses are often the ones which hire young and inexperienced workers. To clarify, the banking crisis has caused banks, particularly small and medium-sized banks, to be more careful with who they lend to. As it so happens, small and medium-sized banks give most of their loans to small and medium-sized businesses. Fewer loans therefore means higher youth unemployment. Now, there are many reasons why youth unemployment is significant. For starters, it can be an indicator of higher unemployment in other age groups. If youth unemployment stays too high for too long, it can also result in a decline in long-term productivity due to a lack of work experience. However, the biggest reason why the youth unemployment rate is significant is because it's considered to be a precursor to social unrest and even civil war. It's believed that high levels of youth unemployment played a key role in the Arab Spring, the Russian Civil War, and even the French Revolution. That's probably why Chinese authorities recently decided to stop publishing their youth unemployment statistics. Youth unemployment in China is reportedly over 20%, and that's according...
It's because young people don't want to freaking work. They don't know what it's like. Like, dude, running my plumbing company, the amount of kids that I had to, either fire or not hire because, or just, they worked for a little bit and that was it. It just, they don't want to get out of bed. It was just absurd. It really is.
To the official statistics. Like inflation, it's possible, if not likely, that the actual youth unemployment rate is much higher. But, as with inflation, it's not the number that matters, but the direction it's going and how fast it's going there. As I mentioned a few moments ago, youth unemployment appears to be rising fast. It looks like the general unemployment rate is starting to follow suit, but it's too soon to say. If general unemployment does follow in the footsteps of youth unemployment, then it could soon surpass the aforementioned 4% target set by the Fed and some other central banks. It's believed that this will force them to lower interest rates, but this likely depends on how much it impacts the economy. This pertains to the fourth claim being made by the media, and that's that the economy is strong and that the consumer is resilient. In case I didn't make it clear enough, economic growth fundamentally depends on consumption. If people consume, the economy is strong. If they don't, the economy is weak. That's why the Consumer Sentiment Index is another measure that economists and investors watch very closely. Naturally, the more confident consumers are feeling about the economy, the more likely they are to spend money. Where consumer confidence is headed depends on what factors are driving it. For example,
actually, if you guys didn't see the pinned comment in the live chat, that video that I posted about billionaires investing into crypto, again, leave some feedback on that in the comments if you guys could. And I am going to do a raffle for whoever gets a 24-hour hash rate on the KS0. If you leave a comment on that video, I'll pick it later today. But it kind of goes into why billionaires are investing into crypto. It makes total sense. The way the economy's heading, it's going into such a a downward spiral where something else is going to have to take the dollar's place, and it's going to be some sort of digital currency. Like it's just a fact.
In the US, consumer sentiment has been rising since the start of the year, but it saw its biggest drop in 2 years last month, much more than was forecast. The drop was due to a combination of concerns around rising inflation, a deteriorating labour market, and higher borrowing costs. Funnily enough, those are the 3 factors we analysed earlier in the video. Now, similarly to the youth unemployment rate, the Consumer Sentiment Index paints a very concerning picture when you zoom out. The last time the index was hovering this low was around the 2008 financial crisis. In fact, it hit an even lower level last year, which makes sense given what was going on at the time. In case you've forgotten, last year inflation was in the double digits in most countries, and central banks were raising interest rates at record speeds to try and fight this inflation. This resulted in a double whammy for consumers: more expensive goods and services and more expensive debt payments. The silver lining was that the increase in interest rates was concentrated among shorter-term interest rates. FYI, short-term interest rates are the only ones that banks can influence. What's different this time around is that it's the longer-term interest rates that are rising, and these are influenced by the markets. Moreover, longer-term interest rates directly influence the interest rates on other forms of longer-term debt, such as mortgages. As some of you may have heard, mortgage rates in the US recently hit their highest levels in over 2 decades. That's despite the fact that the Fed is probably done raising rates. So this begs the question of why longer-term interest rates are rising, and the answer seems to be because investors believe that inflation will stay higher for longer. As a result, they demand that interest rates on longer-term debt be higher to compensate for the inflation, kind of like what's happening with wages. Now, the silver lining in this case is that most mortgages are fixed and long-term, at least in the US. This means that a change in mortgage rates will only impact those who are trying to buy new homes. For countries with shorter-term fixed mortgages, like the UK, rising mortgage rates means people will lose their homes. It's safe to say that losing your home doesn't inspire consumer confidence.
Real quick, does anybody here have an adjustable mortgage rate? Does anybody have that? Where they can just like change the interest on your shit whenever the hell they want? But it's yeah, I don't know. That is the leading cause. Like, remember all the foreclosures happened in, what was it, 2007, I believe? So many people got just completely destroyed that way. But I would love to know in the chat if you guys have an adjustable mortgage rate or not.
Index for the UK fell sharply below 2008 levels a couple of months ago and has barely recovered. The worst part is that mortgages aren't the only debts that people have. Credit card debts have been reaching record highs in many countries over the last year, with US consumers racking up over $1 trillion worth. If you own a credit card, you'll know that the interest rates on these debts are very high, and they can go even higher when interest rates and inflation rise. Double whammy. Now, the fifth claim being made by the media follows on from the fourth, and that's that savings are at record highs. Now, this is easily the most controversial claim being made by the media, which has posited that all the pandemic stimulus and rate cuts made it possible for every person to fill up their piggy bank. As with all the statistics discussed so far, the devil is in the details. According to some sources, there are trillions of dollars of excess savings out there, somewhere. When you dig deeper into the data, however, you realize that these savings are heavily concentrated among wealthy individuals and institutions. This wealth is becoming even more concentrated because of higher interest rates, because those with large cash piles can earn a high yield by investing in US government debt. Some economists believe that high interest rates are paradoxically resulting in higher inflation because of all this passive income. Meanwhile, the average person has in fact depleted their savings.
Real quick, UK Miners Club, yeah, I'm just reading it now. Sorry, I did miss it. He said what he isn't saying about the youth unemployment in quotations is that most of them became influencers during the pandemic, so they aren't being counted. they are earning but not contributing to the economy, which is, yeah, that's very true. Very, very true.
According to the US household saving rate, personal savings are at the lowest levels they've been since the early 2000s. It's believed that this is a big part of why credit card balances have risen so much over the last year.
And Dumpster Fire said, I knew a dude with a variable rate in 2008. His mortgage went from 2.5% interest to 18% overnight. That is absurd. What is a 4x? It'd be 10, right? That like almost 8x'd on him. That's absurd.
Another handy statistic to assess the actual savings rate is how many people are living paycheck to paycheck. Well, just recently, it was revealed that around 61% of Americans are doing just that.
Does that actually shock you guys? People living paycheck to paycheck, 61% of Americans? That's crazy.
To put things into perspective, this is an increase of 2% over the last year. As with all the other statistics discussed so far, the direction and the rate of change are what's important. If we extrapolate a 2% increase for the next 2 to 3 years, which seems probable given the circumstances, this means that more than 2/3 of Americans could soon be living from paycheck to paycheck.
It's sad.
This happens to be...
It's sad because, like, you can't... There's nothing you can do about it. Like, you work your ass off, and some people are just... You know, you get stuck in a job that you either like, or you're kind of in a place where you can't really just go get another job, and everything's going up around you, but you're not getting a raise. It sucks. It really does suck. And I feel for you guys if anybody here is, you know, has to deal with that. It's tough.
Consistent with the recent excess savings assessment by the San Francisco branch of the Fed.
And I say that because my parents have... I grew up like that my entire life. Like, my parents struggled literally from day one, and it was, yeah, they're still struggling to this day. So I do feel for you guys if anybody's like that.
It found that there are fewer than $200 billion of excess savings remaining. To put things into perspective, it was $500 billion at the start of the year. This means excess savings could run out soon. And that means that Americans are likely to take on even more debt to try and keep up with the rising cost of living. It goes without saying that this will take an immense emotional toll. It's a feeling that many of us are familiar with. No matter how hard you work, you just can't seem to get ahead. This hopelessness can, and often does, increase the propensity to YOLO whatever money is left into crypto and meme stocks. Lo and behold, the so-called retail army has reportedly been betting record amounts of money on single stocks, $1.5 billion in a single week back in June. While it's not the most prudent thing to do, you can understand their desperation. Why spend a few $100s paying down unpayable debts when you can take a punt on a meme stock that might come good and help you pay back all of your debts?
Kind of a cool image.
For them, saving money seems to be a futile endeavor with high inflation and high interest rates. Now, this connects to another claim being made by the media, and that's that the markets are rallying. Believe it or not, but this claim isn't entirely accurate either. Don't get me wrong, stocks have been rallying like crazy since the start of the year. The thing is that it's just been a handful of companies. Only around half a dozen stocks have been rallying since the start of the year, namely tech stocks. This has pulled up stock market indices such as the S&P 500, even though the other 494 stocks in the index have been trading sideways, like the inflation dynamics I mentioned earlier. A true bull market also requires bullish catalysts to keep it going. Catalysts can be grouped into macro factors and stock-specific factors. From our perspective, neither are looking particularly promising in the short to medium term. On the macro factor front, there are concerns of inflation rising, interest rates staying higher for longer, unemployment increasing, and consumer confidence and spending coming down. By now, you'll know that these concerns are more than justified. Some would say they're in full swing already. On the stock-specific factor front, meanwhile, there are concerns about declining earnings, which are guaranteed if inflation rises, interest rates stay higher for longer, and consumer confidence and spending come down. Note that many retailers, like Target, reported their first sales declines in years and are forecasting further declines. But, as we've seen, the thing that's been driving the markets the most these days is narrative. In stocks, the narrative has been AI, which will bring about huge productivity gains and increase earnings. So long as evidence for this narrative continues to come in, then stocks could very well continue to rally, even if the real fundamentals continue to deteriorate. The catch is that if these narratives happen to fall apart, then the rally will turn into a crash, and the fundamentals will kick in. Let's just say that it's just as easy to make a narrative as it is to break it. So, with all that said, why do the people in power appear to be gaslighting us about all of this? Well, the short answer is something I talked about earlier: social unrest. If the average person realized just how bad it was, then the people in power, well, would not be in power for much longer. The rise in populism we've seen around the world is a consequence of this fact, and it's a trend that's likely to continue so long as times are tough. The scariest part of it is that the people in power are trying to infiltrate this populism to ensure they stay in control, even when the supposed change occurs. If they succeed, then this effectively guarantees that we will see history repeat. There will be a reckoning, everything will seem fixed, and then it will slowly start to fall apart again as the people in power return to their previous ways.
Real quick, everyone says we're going backwards. We're all children. Misfits are coming home. We're all moving in with Chump Change. Says Crypto Shaped. Dude, it's crazy. It's crazy. Kids aren't going to be able to purchase homes. Like, there's no way, unless they're making a crazy, obscene amount of money.
I would say that human corruption will cause this regardless. That said, however, these volatile times have the potential to offer enormous opportunities to those who pay attention. Paying attention is admittedly difficult, especially when a lot of what you see in the news is propaganda, and a lot of the independent information you find is often pretty depressing. A bit like this video. But make no mistake, these next few years are where the future leaders of the private and public sectors will be determined, where freedom can actually be won, and where wealth can be truly accumulated. So, the first step is to swallow the black pill of what's really going on so that you can act appropriately. You'll find that the way you should act is to do the opposite of what everyone else is doing. If everyone is investing, don't invest. If everyone is spending, don't spend. If everyone is borrowing money, don't borrow. You'll be surprised at how much further ahead you'll get by just not doing what the others are. Not financial advice, of course. And it's not just what you do either. It's what you pay attention to every day. If everyone is paying attention to the latest UFO story or similar, ignore it and ask yourself, what's really going on in the world?
Yeah, it's kind of neat. That's a huge conspiracy in itself, right? The UFO thing, like, just in general, regardless, like whatever you believe, real, fake, whatever, there's got to be something else behind the scenes that's happening if they're allowing that UFO stuff to take over the actual, like, narrative of TV. Like, it's just, there's no way things aren't happening in the background. They're trying to distract us, right? Conspiracy theory, tinfoil hat moment, sorry.
Finding that information isn't easy, but it can be found. And once you find it, you'll be on your way to success. As Morgan Creek Capital's Mark Yusko once said, quote, "Focus is the greatest superpower." It's also a superpower that's available to every single one of us. Focus on the right things, and you will succeed. And that's all for today's video, folks. If you found it
shout out to Coin Bureau for the video. He is awesome. All right, let's see. What are you guys saying in the chat? We gotta get out of here in just a second, but I do have let me see. I wanted to go to Cointelegraph. Let me see. What am I doing? There we go. Cointelegraph. Let's see. So this is actually the thumbnail I made today. Coinbase to integrate Bitcoin Lightning Network, CEO Brian Armstrong. It says Lightning Network helps Bitcoin solve its scalability problems to compete against newer cryptocurrency projects that promise comparatively faster and cheaper transactions. So this is kind of neat, I guess. Crypto exchange Coinbase has confirmed its decision to integrate Layer 2 payment protocol Lightning Network as users seek faster and cheaper Bitcoin transactions. Lightning Network was created to help solve Bitcoin's scalability problem and compete against newer cryptocurrency projects that compromise comparatively faster and cheaper transactions. Up until recently, major crypto exchanges, including Coinbase and Binance, had no intent to adopt the Layer 2 solution, as many community members argued that LN integration offered fewer incentives for exchanges income. Which, yeah, if it's cheaper, then yeah, it's true, right? But let's, in quotations here, it says, Bitcoin is most important asset in crypto, and we're excited to do our part to enable faster/cheaper Bitcoin transactions. Will take some time to integrate, so please be patient. That is from Brian Armstrong, I assume. So this is it's kind of neat news. I don't know what you guys think about that. Let me know in the live chat or in the comments. But that is gonna do it for today, guys. I wanted to just read that to you, make sure you guys were on top of the news. And again, I would really appreciate some feedback on that video I did the other day. It stinks it didn't get a lot of views, but like, I feel like it's a decent video. My opinion, obviously I made it, so I guess it doesn't count, but you guys let me know what you think about it. Let's see. All Set Miner said CCXD agree. The Bud Light moment. Yeah. Oh my God. I don't even want to get into that. I don't even want to get into that. It's funny that nobody drinks Bud Light anymore, though. All right. Let's see. Any other last questions before we get out of here? I know my wife has to get to work, and I got to go to daddy duty. So for Dad's birthday, I'm taking the kids to the trampoline park. I got to see what time it opens. I don't even know. 9:30 a.m. right now. I'm going to go sprain an ankle. It's going to be great. All right, guys, appreciate you all. You're all fantastic. Thank you so much for all the birthday wishes and all the, what's it called, donations. You guys didn't have to do that. Seriously, you didn't have to. I really do appreciate it, though. Have a good day. I'll catch you guys bright and early tomorrow morning. Peace out. Hit that like on the way out. Peace, peace.